Not too long ago, Oracle was the talk of Wall Street, seen as this unstoppable new player in the whole AI and cloud game. But then, almost overnight, all that positive buzz just fizzled out. So what on earth happened? Let's get into it and figure out what caused this sudden change of heart.
Okay, so to really get the shift, you have to understand just how intense the hype was. Right before their big Q1 earnings report for fiscal 2024, the feeling out there was absolutely electric. Analysts were tripping over themselves to praise the company. Quotes like this one were everywhere, painting this picture of a company that could do no wrong.
And then the report came out. The stock took a nosedive, and the whole story just completely flipped on its head. So the big question is, how did Oracle go from firing on all cylinders to facing this wall of doubt pretty much in the blink of an eye?
To really get to the bottom of this, we've got to first look at just how sky-high the expectations were. I mean, the market wasn't just optimistic, it was downright euphoric about where Oracle was headed.
This number pretty much says it all. Oracle's stock hit an all-time high right before that report. And that price wasn't just a number, It was a massive vote of confidence from the entire market, a huge bet that the company was on the verge of something truly explosive.
And that bet was super specific. All the excitement was really about two key things: Oracle's cloud infrastructure, or OCI as you'll hear it called, and their really aggressive, very public push into artificial intelligence. Everybody believed Oracle was finally ready to take on the giants.
And then we hit the turning point. This was the moment that perfect, flawless story ran smack into a much messier reality: the Q1 2024 earnings report.
So when you look at these numbers, you might be scratching your head. Oracle brought in $12.45 billion in revenue. Wall Street was expecting $12.47 billion. I mean, we're talking about a difference of just $20 million on sales of over $12 billion. It seems like nothing, right? A rounding error.
But here's the thing. In the world of these high-flying tech stocks, there's really no such thing as a small miss. When a company's stock is priced for absolute perfection, any little stumble, any tiny crack in that perfect growth story sends this massive signal to investors that, hey, maybe things aren't as flawless as we thought. But you know what? That headline revenue number, that wasn't even the main event. To find the real reason the market freaked out, we have to dig just a little bit deeper into those numbers. And there it is. This chart right here is the smoking gun. See, in the quarter before this, Oracle's cloud business grew by a mind-blowing 54%, just incredible. But in this new report, that growth slowed way down to 30%. This was the number that sent a shockwave through Wall Street.
And of course, the analysts jumped all over it. This quote from UBS just perfectly captures the new mood. And the keyword here, the one that matters, is deceleration. It might just sound like slowing down, but for investors, that word is a massive red flag.
So what does growth deceleration actually mean? I mean, come on, 30% growth is still amazing, isn't it? Of course it is. But here's the catch. When you're a stock that's priced for the moon, it's not about how fast you're going. It's about whether you're hitting the gas or tapping the brakes. And this looked like tapping the brakes.
Now, this slowdown didn't happen in a bubble. To really feel the weight of this concern, you have to look at the battlefield Oracle is fighting on. It is incredibly, incredibly competitive.
Oracle isn't just up against anybody. It's fighting against these three, the titans of the industry: Amazon, Microsoft, and Google, the hyperscalers. These guys have been dominating the cloud market for years, and they are not easy to compete with.
And that's exactly why this slowdown matters so much. In a market this fierce, you have to sprint just to keep up. So if your growth is slowing down while these much bigger rivals are still chugging along, you're not just slowing down, you're actively losing ground.
This chart just gives you a sense of the mountain Oracle is trying to climb. Yeah, they're making some noise, they're winning some deals, but they're still a pretty small player in a game that's dominated by absolute giants. To win here, you need sustained, explosive growth, and that's the very thing that's now being questioned.
And that intense competition is exactly why we have to talk about the company's valuation. Before this report, investors were paying a huge premium for Oracle stock. We're talking over 20 times what the company was expected to earn in the future.
And that right there connects all the dots. That high stock price, it was a bet, a very expensive bet on that amazing growth story. So when the Q1 report came out and showed that growth was decelerating, the whole reason for paying that premium price, well, it started to look really shaky. The story and the price just didn't line up anymore. So, where does all this leave Oracle? Well, it basically puts the company, and anyone watching it, right at a crossroads. And there are some really compelling arguments on both sides.
You can really see the two competing narratives here, right? On one side, you've got the bulls, the optimists. They're looking at a huge $30 billion AI pipeline, key partnerships, and customers who are basically locked in for the long haul. But then you have the bears, the skeptics, and they're focused on what's happening right now. Growth is slowing down now. The competition is brutal now. And that valuation feels really risky now. It's a total classic battle of future promise versus present-day performance.
So, what are the big takeaways from all this? First, all eyes are on the next earnings report. That's going to tell us if this was just a one-time stumble or the beginning of a real trend. Second, it's just a great reminder of how fast the story can change on Wall Street, which is good to remember for any investment. And finally, it all comes back to valuation. You always have to ask, does the price you're paying actually match the reality of the business?
Which leaves us with the million-dollar question. Was this one bad quarter just a temporary storm that Oracle can sail right through? Or does it signal a much bigger, more permanent change in the competitive climate? The answer to that is going to define the entire next chapter for this tech giant.